Good morning or good afternoon, everyone, whenever or wherever you're watching this video. Thank you for subscribing and taking time out of your busy schedule to watch today's video. I hope everyone's having the best day of their life or the best week of their life. If you found value in today's video, make sure to hit the subscribe button. Most of my videos are usually about investing, health, and life. Today's video is going to be about my 11 favorite stocks that I'm going to be buying in 2022. And I'll tell you why I'm buying these stocks. Leave a comment below with what stocks you'll be buying in 2022 and why you'll be buying these stocks. Let's try to hit 7,000 subscribers in 7 months. With all that out of the way, let's get into today's video and see what these 11 stocks are. The first stock that I would be buying and adding more, I currently own Tesla shares and I currently will be buying more. The reason I'll be buying more is because there's multiple reasons. I will have my own separate video for all the rest of the reasons. But one of the reasons is because they're considering a stock split. They're going to have a vote on it if you're a shareholder. Also, I think Elon Musk has a lot more in his sleeves when it comes to Tesla and all the other companies he's, working on right now and currently owns. And also, deliveries are, hitting expectations. Also, we have a couple of new factories that recently opened. We had one in Germany, and then we had the one in Texas. Currently, Tesla is trading at $1,022. Yes, I know the PE ratio is really high, but I think it has a lot of room to grow. When you look at the financials, they have a lot on their balance sheet, and their balance sheet looks really great. They've been beating earnings, as you can see. So this is another reason why I like Tesla. The next stock or company we have on the list is Apple. And I'm pretty sure none of you guys don't know what Apple does or doesn't do. Right now, Apple's market cap is $2.78 trillion. The PE ratio is 28.24, and it pays 0.52% dividends. The CDP score is A-. And over the year, let's see how it's been doing. It's up almost 30%. And as you know, Apple's balance sheet is always going to be amazing. They did miss earnings in Q4 2021, but it wasn't by much. And I still see Apple doing some amazing things. So if you look at the news, I can see them still probably have a couple of things up their sleeve with Tim Cook looking to retire soon. I think he'll probably do one more thing before he does it. And we still have Apple Car whenever that comes out, or if they're working on it. And then you know how many people already love the iPhones. And as the market is trending downwards, as you can see a whole bunch of people selling Apple right now. So I'm hoping it keeps dipping down so I can enter at a good price, because I'm not looking to pay what the price is right now. I'm looking for it to dip. And once it dips to a good price that I like, that's when I'll enter. And then we have Microsoft Corporation's MSFT, which is currently trading at $296, has a CDP score of A. The PE ratio is 31.60. It does pay 0.84% dividends. The financials, let's look at them. And as you can see, Microsoft is always going to have amazing financials because everyone uses a laptop at work. And majority of the laptops at work are usually Windows based. And if you haven't heard, Microsoft just acquired Activision Blizzard, which Warren Buffett just bought a whole bunch of Activision Blizzard shares recently, just a couple months ago. So this is another reason why I'm buying Microsoft. Also, I'll be looking to acquire Nvidia soon. Nvidia. Current price is at $230.50. The CDP score is B. It does have a high PE ratio considering the fact that we are going to look in the future and see if Nvidia can make more chips, because right now we have a whole bunch of people mining crypto, making NFTs, doing this and that. Then we have a lot of people staying at home playing video games and everything else with the Nvidia stock that you can think about. The PE ratio is at 60.10. It does pay dividends, even though it's not that high. It's 0.069%. When you go to their financials, you can see they have a lot of cash on hand right now, 702 million. It's up 150%, and everything else is up. And they've been beating earnings lately. So if the stock falls at a nice price, you can see me entering this position most likely. And over the year, it is up 52%. Then we have AMD, Advanced Micro Devices, currently trading at $100.96. This doesn't pay any dividends, but let's look at their financials. Yeah, their financials aren't looking too great, and there is competition with them. You have Apple, you have Nvidia, and other companies making chips. So they have a nice competition, but I can see a lot of companies that are buying laptops for their employees that use AMD chip. So that kind of tells me that I'm not too worried about this, and they still have a lot of cash, as you can see, the 95 million. Next stock we have in the list is Alibaba, trading under the ticker BABA. Yes, I know there's been a lot going on with Alibaba, but right now it's really cheap, and Charlie Munger is buying it, so why not buy into Alibaba? All the reasons it's more to buy into Alibaba is when you have Charlie Munger, you have... So the reason I replaced Alibaba with Amazon stock on my list, as you can see on this chart, Amazon has all these different sectors and they're doing all these different things, but there's always competition with all these different companies. That, like for entertainment, they have Disney, they have EA, they have PlayStation, GameStop, all these other companies that they have to compete with. For the music, they have Spotify to compete against. For home appliances, they have Home Depot. For Amazon Dynamic DB, they have Microsoft and probably Google and other companies that are competing with. For Amazon Drive, they have obviously Google, they have IBM, they have Dropbox they're competing against. And as for Amazon meal kits, you know, there's gazillion companies out there that are offering meal kits. HelloFresh is one. They're competing with other restaurants. Amazon Fresh, they're competing with Instacart, Costco, LD. Amazon Fashion, you know how many companies are in fashion right now. We're not even going to go into detail. But these are all the different sectors and all the different competition Amazon has. Plus, there's even more than this. They're just not on the list. Here's another image of Amazon competitors. So I'm going to leave this on the screen so you guys can take a look at Amazon's competition. If you go to the financial tab, you can see as of December 2021, the cost revenue is up. Net change in cash is up 60%. They missed earnings the last 3 quarters. But let's go deeper into their finances. The English thesis on Alibaba is the Chinese economy, Alibaba's competitive position, the financial health, and the valuation. All these together give me the validation that Alibaba is a great stock to invest in right now. When you take a look at Alibaba's financials, earnings and cash flows are the revenues. Its growth is 42%. Net income is up 11.3%. Diluted EPS is up 9.8%. free cash flow is up 13.66%. Those are pretty solid metrics, but they were all much higher prior to this year. And it all has to do with the Chinese tech crackdown caused last year. That's why the numbers are suffering right now. And that's why Alibaba is taking a major hit. Baba did take on some new costs in 2021, like 2.8 billion in fines and higher tax rates. So this is really hurting the company right now. So even with all the bad news, the fine was non-reoccurring and the higher tax rate could be outgrown with enough quarters of strong revenue gains. At any rate, Alibaba has more than enough financial strength to ride out the few lackluster quarters. Its balance sheet is one of the strongest in the world, boosting eye-popping metrics like 276 billion in assets, 100 billion in liabilities, 176 billion in equity, 45 billion in cash, about 20 billion in debt, calculated from the 5.9 billion in bonds, the 14.85 billion in long-term bank loans, the 105 billion in current assets, the 64 billion in current liabilities, the 0.2 debt to equity ratio, and a 1.64 current ratio. When you look at the adjusted PE ratio 11, the price to sales 1.96, the price to book 1.67, price to operating cash flow 9.37. These pillars make the stock look like it's really, really cheap right now. And all these multiples are comparatively low compared to the tech company Amazon. Here's another reason why I'm buying Alibaba stock. If you look on the screen right now, you can see all the different people that are adding positions into Alibaba recently, and how much they're adding, and how many shares they bought and currently own or whatever. So this is why I'm also investing, but I also love the company. The next stock I have on my buying list is Costco Wholesale Corporation, trading under the ticker COST, COST. Currently, it's trading at $590.39. It does pay 0.61% in dividends. The PE ratio is high right now. Well, everything else is high. Over the year, it's been up 59%. Over 5 years, it's up 245%. And when you go to the financials, it's all green. Yes, the net change in cash is alarming, negative 932 million, but it is beating earnings for the last 4 quarters. So if this stock falls to a good price, I will be entering. And if it doesn't, I'll still be entering, but I'm just waiting for a nice dip so I can enter a nice price. The next stock on the list is Walt Disney, trading under ticker DIS. It is currently trading at $130. The PE ratio is 77.43. So let's look at some companies that Disney owns that you might not know of, or you probably did know of. So Disney owns all these different stocks. It owns Pixar, Marvel Studios, 20th Century Studios, 20th Century Animation. It also owns other companies and things you might be watching like ESPN, Freedom, FX, National Geographic, Disney Plus, Star Plus, ESPN Plus, Hulu, Hotstar, and many other companies that you might not know that they own. So here's a picture of some of the companies Disney owns. And as you can see, it doesn't even fit, so you can't even see like all the sub companies that they own. So here's some streaming services or companies that Disney owns that you might not know that they actually own. Here's Disney's financials. Revenue's up 34%. Net income is up 6,394%. Diluted EPS is up 5,900%. Net profit 4,960. Net change in cash, so it looks like they are doing horrible on that. It's down 79%. Cash and equivalents is down 15.37%. Cost revenue is up 23.71%. The next stock I'll be looking to purchase, and one of my favorite stocks right now, is Google stock, trading under the ticker GOOG. There's two different types of Google shares out there. There's Class A and there's Class C. So what's the difference between them? Well, let's go over that. So the difference between Class A shares and Class C shares are Class A is known for having the typical voting rights, whereas Class C does not give you the voting rights. That's about the main difference between those two. There's also a Class B, but it's only held by the founders with 10 times the voting power compared to Class A. So how does Google make their money and their profits? Well, let's go over that real quick. Google makes their money in 6 different ways. The first way is they use Google Ads. So every time you go on Google and you search something, sometimes it has an ad, and then when you go on the website, it has an ad. So the ads from their Google search, and then their ads from YouTube videos that most of you people watch out there. There's a lot of great content on YouTube, and that's where they get majority of their money is from these ads. Another way they get their money is Google Cloud, which offers the storage. And no, I'm not talking about the free cloud storage that you get with your Gmail account. It charges for additional storage if you need it for like network and operation costs. So the operations are designed to monitor, troubleshoot, and improve the infrastructure and application performance. Another way Google makes their money is hardware. There's Google Pixel smartphones, tablets, laptops, and earbuds. And then there's also the Google Mini, which you can have in your house. And then there's Google smart home products. There's also Google Play Store, where they make their money. And then you have YouTube premium content, where you can watch TV shows, other streaming services. There's YouTube TV, and that's the last way they make their money. Another reason why I'm buying Google stock is not only because I work on Google and make a lot of YouTube videos, but it's also because Google has this website where you can go and learn about Google AI. And you can learn about Google machine learning and all these other different things that are offered for you so you can get, broaden your horizon and learn about different subjects. The next stock I'll be looking to purchase is Block Inc., aka Square. Trading under the ticker SQ, it's currently trading at 121.31. So it has a market cap of 70 billion. It's used by a lot of merchants and people around the world for financial services and digital payments. And if you look at for the year, it's down 50%. If you look over the 5 years, it's up 593%. So this is another stock I'm considering buying in 2022. And when you go to the financials, they have a lot of net change in cash, but it's still down 64%. The operating income is down 220%. The net profit margin is down 120%. The diluted EPS is down 131%. Net income is down 126%. Revenue is up 29%. They did beat earnings last quarter, but they did miss earnings the last 2 quarters before that. The last stock I will be buying in 2022. It won't probably be the last stock, but it's one of my targets, is Meta Platforms, trading under ticker FB, aka Facebook. It's currently trading at $210.18, so $210.18. Over the year, it is down 30.46%. Over the 5 years, it is 46.28%. The market cap for right now is $570 billion. The PE ratio is 15.26. It has been getting hammered down with all the stuff that's been going on recently with Facebook. But I still see it as a great opportunity. Much about the business hasn't changed. Yes, they did lose a lot from all the stuff that happens with the ads on Facebook. But they still have ads on their Instagram. But they also own many other companies you probably don't know about or you never even thought of. But let's look at their financials first before we go over those other different products that they have to offer. So they did beat earnings last quarter. They missed earnings before that, but they did beat earnings before that one twice. And they still have a lot of cash on hand. The net change cash is down, 65%, but they still have a lot of cash on hand. So let's look at all the different products Facebook offers. So first off, you have Facebook.com, Facebook itself, Facebook Lite, Instagram if you didn't already know. They own Instagram. Instagram Reels, Instagram Shopping, Facebook Media, Facebook Messenger, Facebook News, Facebook Shops. They also own WhatsApp, so I know a lot of people that use WhatsApp. And they also own WhatsApp Payments, Facebook Ads. Even though they don't have ads like they used to, they still have a little bit of ads every now and then. Facebook Businesses, so it offers Facebook Businesses for small, medium, large businesses. So you can see all the different things that they have to offer. The Oculus for the metaverse.